Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, September 30th, 2019. We are now in the final trading day of the month, so September has been an interesting month, and we are also in the final trading hour of today. And as many of you know, in my opinion, the prices that you can get as close to the close as possible are the best prices, the most valid prices to make your buying and selling decisions from. That is because during the day you have the algorithms, you have the day traders moving the prices all around, but at the end of the day the big boys come in, the large financial institutions, the market makers, and in my opinion they have the best concept of what the closing price should be, and therefore they move it to that price. And like I just said, those prices, in my opinion, are the most valid prices. And that's why I make the majority of my buying and selling decisions based on the price that is as close as possible to the closing price. So anyway, like I said, last day of September's trading month. So it'd be interesting to see what this next quarter brings. October, November, December generally are some interesting months, especially October. So as always, let's be careful out there, position size correctly, trade our plan, regardless whether it's going up our way or going down against us. So, as always, let's always be careful. Let's see here. Hey, Steve Burns is here. Hey, buddy, what's going on? Good to see you, Steve. Always an honor to have you here, my friend. Really, I really mean that. Steve says, hey, Greg, great to see your channel growing. Oh, thank you, Steve. I really appreciate it. You've had a big impact on that, Steve, as far as, your list on Twitter. And so I'm eternally grateful to you for that and for everything you've done for me as far as teaching and mentoring, and what you do for everyone else as well with your books and your channel, all your great advice. So thank you so much for coming, Steve. I appreciate it. Jesse's here. Hey buddy, what is going on? Good to see you, sir. Hope everything is well in Minnesota, and look forward to working with you tomorrow. Let me know if you have any questions here today. All right. William, hey, how you doing, William? William's our friend from Hawaii. Good to see you. Haven't seen you for a bit. Hope everything's going well. Hope Cooper's doing well. That's your doggy. Steve Burns says, this is great to hear that I helped you grow. Oh, 100% you did, Steve. Thank you so much. Really, I'm eternally grateful for this. All right. So, hey, Bing He, how you doing? Good to see you. That's our friend from Singapore. Hello. Good to see you, and glad you understood my email this weekend. Hope that helped you out, and thanks for getting up early and attending the podcast. I appreciate that. So, all right, well, listen, the plan for today. Oh, Anthony, hey, buddy, what's going on? Hey, Greg, hope all is well. Hope you had an awesome weekend. I did. Thank you, Anthony. Hope you did too. And listen, you have any questions today, anything about what you and I've gone over? If you're not sure on something, you need clarity, you just let me know, buddy. I'm definitely here for you, okay? And be interested to see what's going on with your charts if you got those all set up. So, all right, plan for today is, first of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them moving forward. After that, we're going to do a few minutes on trader psychology. I like to touch on this each day. Your trader psychology, or how you manage your emotions, is the greatest skill that you can develop in trading. It's going to have the greatest impact on whether or not you're a long-term successful trader, or if you are going to be a losing trader. I mean, the technicals, all that is important. There is no doubt. But in the long run, mastering yourself, mastering your emotions, staying even-keeled, not becoming destabilized, doing what you're supposed to do when you're supposed to do it, that's what I consider trader psychology. And so that's why I like to talk about it each day. Hopefully it's going to rub off on you. Hopefully you're going to start internalizing it and realizing how important it is. After that, we're going to go through each one of the stocks in my watch list. We're going to take a look at support and resistance levels. We're going to look at indicators. As you know, the way I view trading, the way I use indicator support and resistance levels, I don't just look at them as lines on a chart. I look at them as potential groups of buyers coming in. So RSI, MACD, moving averages. I look at all of these as potential groups of buyers and sellers. And if you buy a stock and you want the stock to go up, you need to be in the company of other buyers. And the more buyers, the better. And therefore, if you can get a combination of indicators lining up, the more indicators lining up at the same spot, the better. In my opinion, that means that you're going to have multiple groups of buyers coming in. And like I just said, if you want something to go up, you need to be in the company of other buyers, and the more buyers, the better. So we're going to go down, we're going to look for that, and we're going to go through each stock one by one. We're going to look at all the technical levels, and we're going to see if we can find some confluences or combinations of indicators lining up. And if I find something good at the end of the day, I will go ahead and take a position in that just as close to the close as possible. And we'll run through, we'll check off some possibilities, some candidates, but then at the end I like to go through those candidates, whittle it even down probably to the best one, or probably maximum to the best two entries. And if we don't have any, then that's fine too. I won't take any trades. So anyway, we'll go through, we'll take a look, and then after the market closes, if you have any questions or comments, you'd like me to take a look at any stock symbol, please let me know. Just type it in the chat, and I will try to clarify anything that I was not clear on, or take a look at your stock symbols. If you have any just generic trading questions, happy to answer those too. So all right, that is going to be the plan for today. So if you could, please hold tight. I'll be back in about 40 seconds, and we'll get to work. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, what's Larry doing? What's going on? He says, just smash the like button. Oh, well, thank you very much. I appreciate that, Larry. Yeah, if you like what you're hearing today, if it's useful, please hit the thumbs up button. It does help. Bing He says, Greg, I got a Hong Kong stop which gapped down below my stop loss price in the next minute market closed. Greg, I got a Hong Kong stock which gapped down below my stop loss price the next minute market closed. Well, when something like that happens, if you didn't get out when you were supposed to get out, take a look the next morning. If it's below where your stop was, you got to just go ahead and get out of it. Mistakes happen all the time, and when you have mistakes, you got to just get out. For some reason, if it gaps up tomorrow and it's above your stop, I would probably hold it until it closes below the stop. But the safest way, honestly, is if you have a mistake, just go ahead, get out as soon as you can the next morning. I read that post trading is done by institutions. Is this true? Closing price is no longer valid? No. I mean, the institutions do come in at the end of the day. During the daytime, you have more individual traders, you have more algorithms during the day, but the institutions come in at the end of the day, and the market makers, and you can see that clearly in the volume that happens in the last hour of the day. All right, well, let's get to it. So DDM, well, let's take a look at this other chart over here. All right, so DDM, I did buy DDM way back here on August 26th, and the reason I bought it Previous day closed below the 200. The day that we bought it, it closed above the 200. This is a good back-tested, profitable approach, trading DDM, staying out of it when it closes below the 200 on a closing basis, staying in it as long as it closes above the 200 on a closing basis. And if with this type of approach, what you're doing here is that if you're wrong, most likely you're going to be wrong small if you buy it, that if you enter the position when it's close to the 200 days. So if it went under and closed, okay, you have a loss, you're going to get out. But this type of approach allows you large wins if you're right. And you can see, we bought this back here at about 45.96. It's done very well. I phased out all the way. And this is a mechanical trade, so I'm going to hold this as long as the price stays above the 200-day. I am out of about 90% of the position now, so I only have about 10% position left in this. You can see I did hit one profit target here today. So another day or two up, and I will be 100% out of this position. But this is one of my mechanical approaches. It's mechanical because it's DDM, it's an ETF, it's not an individual stock. But yeah, it's been a really, really nice trade. I've held on to this for a long time, but glad I did. Longer you hold on to trades, generally the more you make on this type of approach. So one profit target today. We don't have many positions today, so all right, S&P 500. So in case we have some new viewers today, I mention this every day, but this is one of my trading approaches where I buy the S&P 500 every single day at the close. I sell it first thing in the morning. And it doesn't have anything to do with technicals or anything. It's just the approach is based upon this long-term back-tested approach of buying the S&P at the close, selling it in the morning. But this is from Liz Ann Saunders at Bespoke Invest on Twitter. You have two options. Option number one is you would buy the SPY at the open each day in the morning, sell it at the close each day in the afternoon. Buy at the open, sell at the close. Buy at the open, sell at the close. If you would have used this approach since 1993, excuse me, every day, you would have actually lost a negative 13.9% return. But if you do what I do, which is buy the SPY at the close each day, sell it the next morning at the open. So buy at the close, sell next morning. Buy at the close, sell the next morning. You'd have actually returned 634.2% compared to a negative 13.9%. So the buying at the close and selling in the morning definitely has the edge. And what this means is that, we know the market has gone up since 1993, but buying at the open, selling at the close, you lost 13.9%. You do the opposite, 634.2%. What this means is that all the gains in the S&P 500 since 1993 have come from people bidding the price up in the aftermarket, bidding it up in the pre-market, selling it into the open. And I really, really like this chart here. It's such a great illustration of using a particular stock trading method that has an edge over time. You can see over time definitely has been profitable, definitely has an edge. But what I also like about this chart is also shows that there's a lot of ups and downs, even though you're using a long-term profitable system. So if you're using a system and it doesn't start working for you right away, it doesn't necessarily mean that there's anything wrong with the approach. It just means that in any approach that you use that has an edge, there are ups and downs in the middle. It's just completely normal. So the takeaway here is no matter how good you think your system is, you have to position size correctly, because you might just step into a period of time where you're going to have a drawdown, and drawdowns are totally normal. They don't mean you're not a good trader. Every trader has them, even in the best systems. But you can see nice big run up, down, down, up, down, 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 up, down, 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 up, right? So it's totally normal. So, the best advice I could give any trader, honestly, is to position size correctly so that you can take the long view of trading. You have to look at trading in the long term. Most people look at it like very short term, like I have to make this much money by the end of the month. If you do that, I'm telling you, it's not going to work. If you take the long-term approach, let your edges play out for you, Don't get destabilized. That is going to be your best chance to be a long-term successful trader. Don't get caught up in any kind of short-term results. Think about the long term, and the only way you're going to stay in the market for the long term is by using conservative, proper position sizes. So, all right. With that said, I did buy S&P. Oh yeah, I did buy S&P at last Friday at the close. I did buy it at 295.40. And I sold it this morning at 295.98. So decent little overnight profit from 295.40 up to 295.98. So this has been a really good backtest approach. I will be buying this again today at the end of the market as usual. Okay, SSO. SSO is double leveraged S&P. I bought this back here on September 6th when the 10 EMA crossed over the 50 EMA. This is a good long-term quantified profitable back-tested approach to trading SSO. SSO is the double leverage SPY. I did only buy 1/2 position here because when I bought it, it happened outside of the value zone. I still wanted to take the position, but I didn't want to take a full position because I felt like it was a little high. This has been a profitable trade so far, have scaled out at higher levels. Currently, I have about 45% of my position left. This particular chart is one of those symbols where it's not giving me updated. Okay, but you can see here today, I did hit one profit target as well. So I only have about 45% of this position left. But it's been a good trade so far. It's been a good trade so far, and I will stay in this as long as the 10 EMA stays over the 50 EMA. That's my signal to exit, is if the 10 EMA crosses back below the 50. Otherwise, if it continues to move up, I will continue to phase until I'm out of shares. So pretty easy trade, mechanical trade, scale out to the upside till I'm out, or the 10 crosses back below the 50. Okay. Now, the only other trade I have going on, we mentioned this, I did sell some puts on Disney. Disney is up today, thankfully, but I did sell some puts down here to $123. And you might ask yourself, why did you pick $123? So, when you sell puts, as long as the price stays above your strike price by the end of the contract period, you get to keep all the premium. However, if it does go under, close under your strike price by the end of the contract, you are responsible to buy the shares there. So, selling puts is one of my profit centers. But the reason I picked $123 is because we have the third ATR as support, we have the 200-day as support, we have the 250-day moving average as support, we have the 6th ATR channel support, and also the 30 RSI. So, that is why I picked that price. I also like to look at multiple time frames as far as picking my strike price, and that was on the daily. But on the weekly, at the $123 mark also has the 50-week moving average above it, acting as support. Also the halfway of this big strong bar that we had up, and then on the monthly, same thing, halfway of this bar here back into the value zone. So anyway, it's been profitable definitely so far. This expires on October 11th. If I get up to 80% of the premium that I'm given from what I sold before the expiration, I'll just go ahead and take that off the table. So anyway, this has been a good profitable trade so far. So it's good to have some green today. It's good to put some points back on the board after Friday. And so yeah, that's it. DDM did hit one profit target, did buy this over the 200. So as long as it stays above the 200, I'm going to phase out to the upside till I'm out of shares, or if it closes back below the 200, I will get out of my remaining small amount of shares. SPY, we had the overnight SPY trade, which was a nice trade. Bought at 295.40, sold today at the open at 295.98. And then SSO, we bought the 10 EMA crossing over the 50. That was my signal, half position, have scaled out here at higher levels. If the 10 crosses back below the 50, I will exit, or if it continues up, I will scale out until I'm out of shares. So that is about it. Oops. All right, so listen, this is the time of the day where I do like to do a little bit on trader psychology. You know, it's the most important skill you can learn. So I do like to go through Twitter. I like to look for channels that post good information about trading psychology, trading words of wisdom, if you will. But I do like this channel. Rushi Karia at quanttrader_RK. He puts out some really good information, some good trading words of wisdom. And so I would suggest you go to his channel, read his post, and internalize them. But he says, by adopting multiple trading systems which perform well in different market conditions, this way you smooth out your equity returns over time. By adopting multiple trading systems which perform well in different market conditions, okay, this way you smooth out your equity returns over time. For example, trend following in trending markets, mean reversion in range markets, etc. And he's completely right. And you know, that's exactly what I do. You've heard me talk about this many times, but I do like to have a variety of trading approaches. I don't like to just rely on one particular type of trading method, like trend trading. Like, I don't want to be just a trend trader. I don't want to be just a mean reversion trader or a return to value trader. I don't like to have too many stocks that are in the same industry. Like, I don't want 3 or 4 or 5 tech stocks because it's too correlated. I don't want my trading approaches to be correlated either. That's why, you know, I have crossover systems for trends. I have return to value or mean reversion trades. We have the overnight SPY trade. That's totally different. And then I like to sell options. So I like to have a variety of different trading approaches. And just like he said here, you smooth out your equity returns over time. And it is true. So, you know, I would suggest taking a look at different type of trading approaches. Don't put all your eggs in one basket, just like you don't want to put all your eggs in one basket with one type of particular stock. I don't think you want to put all your eggs in one basket as far as your trading approaches. So, you know, that's why we trade mean reversion. That's why we trade trend trades. That's why we trade deep dip buys, right? And then options, SPY overnight trade. So I am a firm believer in this. So, you know, think about that. But thank you very much for that. I think it's good advice. And you know, if you haven't subscribed to him at quanttrader_RK, I would appreciate it. He puts out some really good information. So thank you, sir. Okay. 1 second. Dog's knocking on the door. Ugh. I must be hearing things. That wasn't her. Okay, Steve says intraday trading is a lot of HFT, high frequency trader, along playing ping pong back and forth. I meant after hour trading, IG, those trading that happen after 4 p.m. Institutions come in after 4 p.m. and I'm not sure if this is true. Well, I mean, you know, after 4 p.m. the volume dries up a lot, and it's difficult to get out because the bid-ask spreads are much higher. Yeah, the prices after the market closes, I don't consider to be super valid because there's such a big disparity between the bid and the ask, especially on smaller stocks. So I'm not sure if that helps, but I guess I'll sum it up this way, being here to say I wouldn't recommend getting out or making trades in after hours, you know, unless you made a huge mistake and that's your only option. But all right. All right, let me just do a quick little check here. All right, well, let's get to it. So first on deck here is Apple. So Apple's having a really nice day today. I think the takeaway on Apple, we talk about relative strength sometimes, but Apple has been quite strong over the past few weeks, where the market has, especially the tech stocks, have really gone down and it's been tough. So, we watch Apple each day. I have noticed that it is definitely stronger than the rest. Unfortunately, I just didn't have a clear signal on this. We do have a V2 today. Here is day one. Here is day two. Day two washes out day one. Certainly looks like we're going to close above day one's close, but there's a lot of problems with this V2. It has a huge gap, right? I don't take gaps over a quarter ATR. It's triggering over the 1 ATR channel, which in itself is positive, but I like to play from the middle of the bands here up to the third. That's the easiest movement. In the value zone, up to the third. In the value zone, down to the third if you're short. So, once you start getting up here, you start pulling the rubber band pretty tight. Not that this can't go higher. More likely it's going to go higher than not. But as far as entering a new position size here, I really can't do it. So if you guys have Apple, I'm really glad this is up for you. Looks like it's taken out this previous high, or this fractal. Fractal is a high with two lower highs to the left, two lower highs to the right. But it's very bullish, but unfortunately, there's a difference between bullish and a good entry. So this is bullish, but I don't feel like it offers me a good risk to reward at this point. Okay, Adobe. So Adobe got down here, did bounce off the 200, had another day of follow through, rejected the 50 EMA. Then we moved back off. Steve Burns had a really nice trade here. He bought at the end of the day because of the previous support here, and that there was a decent risk to reward here. If he was wrong, he'd probably be wrong maybe this much. If he was right, he had 2 or 3 times that to the upside. It's exactly what happens. He exited here even though it closed above 50 RSI, but it did reject the 50, and that's why he decided to take profits, which was a great move. Congratulations, Steve. That was a wonderful trade. I think that was 4.5% in a couple days, so that was awesome. Right now it is down today on an up day. So where would I want to be revisiting Adobe again? Well, back down here again. You can see clearly down in this area is where buyers came in, support came in. So, if we could get under the 200 back over, I would go ahead and take that trade. It would offer us very good risk. If we're wrong small, just close under the 200 day. And if we're right, we could maybe move back up here. So under the 200, back over the 200, a bounce at the 200, under the 30, back over the 30, something like that. MACD is positive. Remember, when MACD is positive, that means momentum is positive. So, anytime you can get into a stock where the green line is over the red line and where MACD is positive, it's always better, right? It's always better to have a positive MACD. All right, AGQ we have to look at on the other chart. All right, so AGQ down again today, 4.88%. In order for me to get interested in AGQ, I would have to have the 5 EMA cross back over the 20 EMA. That would be one signal. Alternatively, if we could go down further, right now it's at a 40.27 RSI. I'd like to see it go under 30, back over 30. So nothing here on silver. Boy, it's had that breakout and immediately failed. So nothing on silver today. Advanced micro devices up barely. We moved sidewards here. We consolidated. We did break to the downside. Where would I be interested in advanced micro devices? If we had some good price action down here at the third ATR, maybe under, back over, under the 200, under, back over, under the 30 RSI, under, back over. So, when we're looking for these dip buys, these deep dip buys, we're looking for, a confluence would be the best. Right now we're at 39.44 RSI. So if I use my tool, go tomorrow, where would under 30 be? Okay, so 30 tomorrow would be right about 226.97. So, If we could go under the 200 and back over the 200, that means we would have rejected the 30 and rejected the prices under the 200. Right in here would be a real sweet spot. So it may get there. If it doesn't get there and goes up, that's okay. We don't take the trade. But what's important is that you identify where some really good levels would be, where some combinations of price triggers or indicators line up, and that is right here. And so, you know, I'm going to sit on my hands until it gets down there. If it gets down there, I'll go ahead, take the position. You know, I'm making this decision right now, no impulsivity. I don't have a position, so I think very clearly on this. But yes, down here in this range, that would be a good level. If it gets there. If it goes up, then we just miss it, right? If it goes down there, then I will take the trade. So Amazon, you know, Amazon's one of those trades right here, or one of these signals right here, where you can talk yourself into taking it. But in my experience, you really want to be patient. You really want to have a very clear signal before you take it. I mean, could I talk myself into taking this right now? Okay, it formed a V1, not a great one. Here is day one, here is day two. It did wash out yesterday's low or Friday's low a little bit, not a valid amount. It should be at least a quarter. And it looks like it's closing above Friday's close. So that is a V1. You also rejected the third ATR channel. So, you know, if you were desperate for a trade, I guess you could take this, but I don't think it's enough. And it might just go right back up from here and I'll miss it, and that's okay. But the V1 is not completely valid because the washout bar is not larger than 1/4 ATR. RSI is still kind of in that no man's land, 37, not really quite low enough. I would feel much more comfortable to buy Amazon down here under the 200, under the 30, back over the 30. I'd feel much more comfortable buying it here. Or conversely, to the upside, sometimes, you know, a stock's stuck right in the middle. And if it's in the middle, it either has to go down more for you to buy or it has to go up more for you to buy. I know it's a weird concept, right? But to the downside, I want to see it go under 30, back over 30. To the upside, I like to see a break back over the 200. So this is one of those trades where it feels a little anticipatory right here. I don't feel like it's really shown us one way or the other what it's going to do. And so under 30, back over 30 is definitely where I would buy Amazon, or conversely, if we go above the 200-day moving average. So, you know, if I was desperate for a trade, you know, I could make it work in my mind saying, okay, we rejected Friday's low, we closed above, and we rejected the third ATR channel. I get it, but I just don't feel like it's made its move yet, but we'll see. So nothing for me today on Amazon. Boeing, you know, on Boeing, I'm looking for a mean reversion trade, or I'm looking for a pullback to value. Value is anywhere under the green line over this green line. So anywhere in here is value, and I'd like to see this come down into the value zone. I'd like to see it stop going down. I'd like to start seeing it move sideways, and the sideways movement shows that there's some buyers coming in supporting it. I'd like to have one attempt to go down, an immediate reversal giving me a V1 or a V2. So nothing yet on Boeing today for me. Alibaba on Friday, we had those news headlines about possibly restricting investment from China. Alibaba just got annihilated, down 5%. Today, Alibaba is barely up. You can see it was up much higher earlier, rejected about the 50% of this bar. So nothing on Alibaba. In order for me to get interested in Alibaba, just like on Amazon, I'd like to see, I want to buy that deep dip, and a deep dip would be somewhere down here, 30 RSI. Caterpillar. All right. Well, you know, I just talked about returning to value, moving sideways. Well, here we are. I mean, we made a higher high. This was great. Overvalued. You don't want to buy up here. come down into the value zone, start finding some support, moving sideways. Well, this is the epitome of moving sideways, right? Bars moving bars getting smaller, moving sideways. This is perfect setup. It's a perfect setup. But the thing is, I need a trigger. We made a higher high. We came back down into the value zone. We moved sidewards. All three check marks are checked here. It's a perfect setup, but we need a trigger to enter us in the trade. There's a difference between a setup and a trigger. You need the setup, you need the context of the chart for your setup, and this is it. Higher high, move back down in the value zone, move sidewards, but now I need a trigger, and a trigger would be if we stab down, went below today's low, tomorrow went below, close back up. And why that's important is the market's testing these levels. And if there's no more sellers down there and buyers immediately take control right back up, then I've just previously tested this area here in the very recent past, and the market told me it didn't want to go down there. So, that's good information to have. So this is a perfect setup. I just need a trigger. DBC. Nothing on DBC. Sorry, some of these charts have real time, others don't. That's why I'm switching back and forth. DDM, of course, we did hit one profit target today. So this is, I'm running out of shares here. I am running out of shares, which is fine. That's exactly what I want to happen. So nothing on DDM, anything new. The Dow. All right, so listen, this is somewhat interesting today. Similar to Caterpillar, we did go up, we made a new high, we came down into the value zone, and we have been stabilizing, moving sidewards. We do have a V2 today. Here is day 1, here is day 2, here is day 3. Day 2 does wash out day 1's bar by more than one quarter ATR, which is good. So it went down, tested this area, didn't like it, came back up. Today looks like we are triggering a V1. We did have a gap here, but it's not larger than 1/4 ATR, so it is valid. So we did go up, we did go down, back into the value zone, move sidewards, and now we have a V2. And in addition, we did close above, looks like we might close above the 10-day EMA, the 5-day EMA, and the 50 RSI. So this does look like an entry for me. DIA, this is just the index of buying the Dow Jones Industrial, the Dow 30. So as long as today closes above Friday's close, and that close is 268.88, I will buy this today, and it will be a full position because it's above the 200-day. Now my stop will be 1/2 of the washout bar. This is the washout bar. Halfway is going to put me right about here. I'll probably use a close below today's low as my stop. So diamonds do look like something I am going to buy today. Disney up a little, not much. So where would I be interested in Disney? Just like I told you guys a little while ago, ideally I'd like to see a combination of indicators down here, under the 30, back over the 30, at the same time we get to the 200-day. Whenever you have that 30 RSI combination with the 200-day moving average, it's a really good risk to reward. Doesn't mean every single one's going to work, but historically these back test really well. So I am going to be looking for position right in here. As you know, I already have some puts on here for, with the different analysis, but right down in this level here, we'll have a 30 RSI. So if we get down under 30, back over 30, under the 200, back over the 200, that will be a real sweet spot, but nothing on Disney today. Etsy. So, we talked about this. It moved up, got too high, came back down into the value zone. We have moved sideways for a couple days here, so that is good, but we didn't have a valid V1 or V2 here. So nothing for me on Etsy. Ford Motor Company, just moving sideways. This is another good example of making a new high here, coming down into the value zone. We have certainly moved sideways. I just need an attempt to go below and then a nice V1 or V2 back to the upside, which would be great because not only would we reject these previous lows in reverse, we would reject the 200-day in reverse. So that would be excellent. So this, not a trade today, but it's a good setup. Facebook, looks like Facebook is up today. It did, right down here, we had this nice combination of indicators, third ATR channel. And why that's important is 90% of prices stay under the positive third ATR channel, stay above the negative third ATR channel. And it just happened to dovetail with the 200. So this is one of those situations where you get two good indicators lining up at the same time as possible support. So it's up a little bit today. Nothing I'm going to do. I'm not going to do anything with Facebook today, but if we did go under the 200, we did go under the third ATR channel and back over, I would enter Facebook, but nothing today. 5 below, down today. We did take a trade here. Had to get out here for a small loss. We are still in the value zone. Looks like today we are moving sideways from Friday. Again, if this it keeps moving sideways and I get another V1 or V2, I will re-enter this and take another position in 5, but nothing today. Gold down today. Down today. I did have to exit gold here on Friday. We bought the crossover here when the 5 EMA crossed over the 20, moved up, and then immediately back down. And this, this happens with trades. You get whipsawed on the trades, but the glass half full approach here is I'm really glad I got out on Friday and decided not to hold it. I mean, I wouldn't hold it because I follow my rules, but some people don't want to follow the rules and they'll say, I'll give it one more day, and it's down a lot more today. So where would I be interested on gold? I would be interested on gold at a 30 RSI, probably somewhere down in this range, depending on how fast it got. So, if I really want to buy gold, I can't force it, to the downside. 30 RSI, ideally if it dovetails with the 100-day, or if it goes up, the 5 crossing back over the 20. Google actually down today. So, we are into the value zone. So once we come into the value zone, I want to see sidewards movement, look for a V1 or a V2. If we have any new viewers here today, guys, you hear me talk a lot about V1s, V2s. If you don't know exactly what I'm talking about, in the description of this video, I do have a link. It's a video lesson on YouTube. It's totally free. You can just go there. It's an hour's worth of exactly what V1, V2s are. So, if you have some extra time, just go to the description of this particular video and you can watch that lesson on V1s, V2s, because I do talk about it a lot. But nothing on Google today. Goldman, I mean, this is really setting up nicely. I mean, we make a higher high, we come back down into the values. Okay, requirement 1, we make a higher high. Requirement 2, we come into the value zone. That one's met. Requirement 3, we start moving sideways. Definitely happened. Now we need a trigger. Well, today does wash out yesterday's close, 100%. So if we get a V1 tomorrow, 100% I'm taking that trade, right? 100%. Higher high, move back into value, stops going down, moving sidewards, attempts to go down. If it keeps going down, then I don't do anything with it. But if we get a valid V1, V2 tomorrow, I certainly take that trade. So nothing yet today on Goldman Sachs. IBB 35.98 RSI. I would be looking for a 30 RSI, under 30 back over for a deep dip buy. That's what I would be looking for on IBB, but nothing here today. Intel having a good day. Nothing here today. We did go higher. We did go into the value zone. We just didn't move sideways. We did have a V1, but this is not a valid V1 because day one's bar is larger than 1 ATR. I don't ever want that bar to be larger than 1 ATR. 1 ATR is from here to here, from here to here, from here to here. You can clearly see this is larger than 1 ATR. But it was a V1 and it is profitable so far, but it's not a correct setup. IWM, Russell 2000, did almost bounce off of the 200 on Friday, but nothing here. This would be a valid V2 today. See how we go higher? We go into the value zone. We did move sideways. This is the washout bar. If we closed above day one's close, which is right here, it would be a valid V2. See that? Make a higher high, come into the value zone, move sideways for a couple days. This is the attempt to go down, but now we would need to close back above the 26 close of 152.38, and it's not there yet, so it is not a valid V2. Johnson & Johnson, V2, but not a valid one. This was way too big. Day one is way too big. We did wash out, and we did have, right now it does look like we are confirming the V2, but it's not valid. It's in the value zone, but day one's bar is too big, and we don't have any sidewards movement, so this is not valid. Coca-Cola, certainly moving sideways. I'd be looking for a big stab down, a reversal for me to get interested. How we doing on time? Oh, crap. All right. Lockheed Martin in the value zone, no trigger. MasterCard moving sidewards, nothing there. Altria, we did go under 30 on Friday. Today it looks like we are closing back above 30. It looks like we're closing back into the value zone. MACD went positive, so this is a potential. We'll go through that at the end. Merck. I'm not sure what's going on with this chart. I know I got out of here Friday. I don't know why this is, but nonetheless, nothing there. Microsoft, nothing there. Netflix, we have rallied under the 30 back over, has rallied a little bit, but nothing quite there. At this point, I would be looking for us to move into the value zone, come off a couple days, look for a higher low V1, V2. Nike, woo! All-time highs with Nike. Held that gap. That's great, but it's too high. Philip Morris up today. So tobaccos have been stronger. Interesting with all the bad news, and they are going up. So it's something interesting. PayPal, I might be interested in PayPal if we get a close above the 200, but nothing there. The Qs, nothing on the Qs. Snapchat. Nothing on Snapchat either. S&P, similar with diamonds. This is a valid V2. This is a valid V2. We move up, we move down, we do move sidewards. Friday we spiked down. Today it looks like we are closing above day one's close of 297. It's completely valid. But I'm not going to buy this one because I have the overnight SPY trade. That's why I am going to buy the diamonds here instead. Basically, same type of setup. SQ up today. 60. Nothing here today. 520 cross, I believe that is a good back-tested approach, but actually I don't have time to back-test this right now. So we did buy this here. This was a good signal here up to here, and then we got out. But yeah, that is strong today. But I'm not going to do anything with Square. SSO we did hit one profit target here today. TLT. Nothing there. Tesla, nothing there. Twitter down a little bit today. We're to 42.67 RSI. I'd like to see this go. I'd like to look for a deep dip buy down here to 30. At the same time, we have the 100 or the third ATR channel. Right down here would be the spot. This would be the spot. Don't know if it would bounce from there, but I think the chances are more likely than not that you're going to have a lot of buyers coming in here. And if you do buy down here and you're wrong, you have the opportunity to be wrong small and the opportunity to be large, to be right large. And you know, that's what you want to do with trading. You want to have those type of trades where your small, your losses are small potential and your potential for gains are large. UNG, no. Okay, so this is a valid V1. We did reject because day one's bar is less than 1 ATR, and so this is a valid V1. We also rejected the third ATR channel, and we also went from under 30 back over 30. So UNH is definitely a possibility today for me as well. Oil down, no. Dollar, nothing. VIX is down but rallied off its low. Verizon, nothing there. Walmart's too high. XLE, nothing there. XLF, nothing there. Real estate just moving sideways. Utilities too high. We did have a nice bounce off of the 200-day on the XLV. Unfortunately, we did reject the 50 RSI, so I don't like that. If I would have bought here for some reason, I would be getting out here today because it did reject the 50. If it closed over the 50, I would hold it, but if it closes under like it is, I would not. I would exit the position, so I'm not going to buy that there. All right, so it looks like the potentials for today are diamonds with the V2, move higher, back into the value zone, move sideways, washout bar closing above the close. So that does look like a potential for me today. Goldman Sachs, possible tomorrow. Russell 2000, no. I'm going to let that one go. PayPal, no. SPY, we're buying that at the end of the day. All right. So it looks like UNH with this V1. Here's day one. Day two, which is today, washes out day one. Closes above day one's close. We also went from under 30 back over 30, under the third ATR channel, back over the third ATR channel. So this one I am going to take today, half position. And the Dow Jones Industrial, as long as we close above day one's close, I will be taking that as well. So looks like I'm going to be buying a full position in the Dow, and I'm going to be buying a half position in UNH. Hey, Marco's here. Hey, buddy. What's going on? Good to see you, Marco. Thank you so much for coming by. If you have any questions, please let me know. William says, hey, Greg, thoughts on discretionary trade here on DDM if it triggers a V2? Yeah, DDM would be fine. DDM would be fine on a V2. I'm actually, I like the V2 on DDM better than I like on the diamonds. But the reason I'm going to take the diamonds is because of my charting. I'm getting real time on this charts on DDM, where at DIA, whereas DDM, see, it doesn't show till the end of the day. Trade Navigator's having an issue. I mean, if I show you over here on this other chart, I like the setup better on DDM, but like I said, if I take DDM, then I'm going to have issues tomorrow on the podcast showing you guys the chart, blah, blah, blah. So they're going to go the same. But yeah, DDM would just be fine. But remember, it's double leverage, so you probably want to take a half position if you want to keep it all equal. But yes, I actually like DDM chart better, but just because of my charts, I am going to take the DIA. But they're exactly the same thing, right? One's just double leveraged. But yes, good call. Good call, William. Bing He says, Greg, do we consider GS a lower high on September 19th? Yes, for sure, because here's a higher high. Now this is a lower high. But we did wash this out, so this is valid here. Anthony says, earnings 10:15 on UNH. I am not sure if that is too close or not, but thought I would make you aware of it. Oh, thanks, bud. Yeah. Yeah. I mean, we have plenty of time. 2 weeks out is definitely okay. A few days out is definitely okay, is still okay. But thank you, Murray. Hey, buddy, what's going on? Good to see you. Kurt L. Hey, what's going on, Kurt? Good to see you. JT, earnings on UNH October 15th. Yep. Usually this puts it up here for me. All right. I better get to work here and put these together. All right. So I'm going to go ahead. I've got a couple to do here, so I'm going to have to be a little quicker here. So I'm going to go ahead and buy the diamonds. I trade several accounts, so I have to budget some time for that. All right, so I'm going to buy the diamonds.
Order partially filled.
And over here, I'm going to buy the diamonds. Okay.
Order partially filled.
All right, and then we're going to take a look at UNH. UNH's pretty good. Like I said, under 30, over 30. Under the 30 ATR channel, over the 30 ATR channel. Nice V1. So, you know, you have three signals there. If 100% we're going to be right, 100% not. We don't know. But if we are wrong, you know, most likely we're going to be wrong fairly small. And if we're right, hey, we might go back up here to the 200, right? So all you can do is look at the possible risk to reward. You never know what's going to happen. So I am going to buy UNH. It is going to be a half position. Because we're under the 200-day moving average.
Order filled.
Okay.
Order filled.
Okay. And then we'll be buying our S&P at the end of the day. So, okay, let's see where we got filled on all this. All right, so we bought UNH at 217.33, 1/2 position. We bought a full position of DIA at 269.24, and then at the end of the day we are going to have bought our overnight SPY position, and I don't know where that is yet, so we'll give that a second. So we got about 30 seconds. Dow's only up 120 now, so it looks like there's a little selling into the close.
Order filled.
All right, 296.77 is where we bought SPY. All right, So UNH we bought at 217.33, so that's our new exit. On this one, my stop is probably going to be a close below the 30 RSI. The diamonds we bought at 269.24. All right, so that one's down a little bit since we bought it. Right there, and then the SPY, our new entry on SPY, we did have that. That was a good overnight trade. Do you guys notice how the SPY V2 did not, it untriggered? Here's day one, here's day two, here's day three. Day two washes out day one. Day three, which is today, we were above day one's close most of the day, but we closed under. So that untriggered. So that in itself would not have been a valid entry. 296.77. So we're up a little on that one. All right, so there we go. UNH and DIA. All right, so DDM, we did hit a profit target. We've had very few shares of this left, which I'm glad. SPY, we entered today again on the overnight trade at 296.77. SSO, we did hit one profit target. We've only have about 45% of the shares left on this one. UNH, half position we bought here with the under 30 back over, under the third HER channel back over, and the valid V1. That's a half position because it's under the 200-day. And then diamonds, it did confirm the V2 day one, day two, day three. Day two washes out day one, and we did close above day one's close, so that is valid. So anyway, we're fairly light. We came into today pretty light, and we are fairly light here. But anyway, I feel good about what we have. So anyway, all right. Well, listen, if you guys have any questions, comments, you want me to look at any stock symbols, please let me know. Before I do that, I just want to do a quick plug. Hope that's okay. But I do want to let everyone know I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I love to teach. I've had really good success with my one-on-one clients. I offer a course. It's 10 hours, 5 2-hour live Skype sessions one-on-one with me. I teach you everything I know. And, you know, the format of the lessons are, you know, after we say hello, I teach what I'm going to teach for that particular session for about three quarters of the time, and then the last quarter of the time, maybe a little bit more, I have you teach it back to me because I have to know that you really know and understand what I've taught you. But you know, you hear about, you have to have a plan and you have to follow it. And what I have found with a lot of students when they come to me, they maybe know one or two setups, but they don't really have a full all-encompassing plan, and that's what you really need. And you know, if you do the lessons with me, I really will make sure that you have a definite, concrete plan that you can follow. So if you're interested, please let me know. You can email me. My email's in the description of this video. The price of the lessons are in the description of this video, or you can reach out to me on Skype. But generally, you know, it just starts with a free phone call. There's no obligation, I promise you, whatsoever. I just want to get to know you a little bit, have you get to know me a little bit, and I want to ask you some questions, you know, to see about how you got into trading, how it's been going for you, what your challenges are, what your goals are, you know, and then from basically what you tell me, if I feel like I can help if I feel like I can add some value, I'll let you know, yeah, I think I can help you. Or if I can't, I'll just tell you, I don't think I can help you, right? And I get those too. And they're usually people say, look, I got 10 grand, I want to start and I want to make a ton of money right away. I'm like, yeah, I can't help you, right? So anyway, if you're interested in that free kind of, get to know you call, please let me know. And you can reach out to me, emails in the description or Twitter. And then lastly, if you've learned something today, if you find this channel helpful, please subscribe or hit the thumbs up button. It helps promote the channel. I get tons of emails from people saying, I'm really learning from your channel. I'm really glad I saw your channel. And the more likes I get, the more Google or YouTube promotes it and gets it out there. So, hit the thumbs up button. It really does help, and I really would appreciate it. So, all right, enough of that. And so let's see. Blah blah blah. JT says earnings on UNH October 15th. Right. Yep, we know that. Greg, can't wait for your interview on AlphaMind. I know, me too. I'm excited about that, Marco. I heard from them today, and so I think I'm doing it Wednesday. And then I think it will be a week or two after that before they put it out. But I'm very excited. I'm very excited for that podcast. It's a big podcast. I'm kind of nervous, to be honest with you, because most of the people on there, they have these huge pedigrees. But, that's okay. I think that's the good thing about AlphaMind is that, they get all sorts of different traders. They get hedge fund managers. They get large financial other institutions, CEOs, and hedge fund traders and heads of trading desks. But, they want to round it out too. They want to get some smaller traders. They want to get some retail traders or some private equity traders like I am. So that's good because there's a lot more of us out there than, the big boys. So I think they want to have someone like that on there. So I'm honored, honestly, I'm honored to be on that podcast, and, kind of nervous for it, so I hope to do a good job. Yeah, nice to have some green today. Like I said, put some points back on the board. Yeah, it was a good day. Oh, and it's the end of the month, so I did have a really nice trading month. Much better before last week, but still, all in all, a nice profitable month, which is important. Day by day doesn't really mean much. I look at my weekly results, that means more. I look at my monthly results, that looks, definitely more. But if I look back on my results, June was a great month, big month. July was a really good month, not great, but really good. August was a small loss, and September was a pretty dang good month. So, that's how it goes. Remember, always keep those losses small, let your winners run, to a degree based upon your technicals, but in any one day, it doesn't make the month, right? You have to look at the longer term, the weeklies, the monthlies, the yearlies, and, see if your edge is playing out. But, when I look at my results, I'm like, okay, good. My approach is working out, and I've been doing this for years. I know it works out, but along the road, you never really know. So don't get too down if you just run into some short-term drawdowns, because they're totally normal. Hey, John, what's going on? ZNGA. Sure, you bet. All right, and Kurt, we have our call tonight, so I'm looking forward to that at 7 p.m. my time. So I'm looking forward to getting to know you a little bit better, and talk about your trading and see what we're gonna do, if anything, right? So okay, ZNGA. So all right, well, this is a return to value. We were above value. Looks like we have come back into the value zone. Is it valid yet? No, it's not. It's valid in the fact that we moved higher. That's good. We moved into are we in the value zone? Yes, we are. That's another requirement. But we need some sidewards movement. We don't have any sidewards movement. We've had down and we've had more down. I need this to at least have another day of sidewards movement. And remember, the importance of the sidewards movement is just to tell you that there are no more sellers, that it has stopped going down. You know, buying something that goes down, 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 down does not instill a lot of confidence, right? You want it to go down, then you want it to stabilize. You want buyers to come in and start buying. If you have buyers, then it doesn't go down anymore. So on Zynga, higher, moved up higher into the value zone. This is good. This is the area I want to buy it, but I need to see some stabilization. Then I need to see an attempt down, reverse back up, showing me that the sellers didn't like these prices. There were no more sellers down here. But if we could get one or two more days to the sidewards and then a V1 or V2, I would be interested there. Oh, good. I'm glad, Kurt. Yeah, I really am looking forward to that. All right. Now, did I miss anything up here? So I talked to William about the DDM V1, V2, and yeah, I do like that DDM trade. I really do. It did trigger. It's fine. But like I said, the reason I didn't take it was because I want to take symbols that I can get with my regular charts instead of having to switch back and forth. But they're totally, completely valid. Did you take that? Did you take that trade, William? Oh, it looks like after hours we're zooming up. Good, good. Oh, William. Hey, Greg. When you take a V1, V2 entering your entry, you're expecting a move to occur within 3 to 4 days. If there isn't a move, you would close out the position with the cross over. Would you hold until a cross back under? Okay, let me read that again. Hey, Greg, when you take a V1, V2 entry, you're expecting a move to occur within 3 or 4 days. If there isn't a move, would you close out the position with the cross over? Would you hold until a cross back under? So on this particular trade here, DDM, this is the washout bar. If I had a close below the halfway of this bar tomorrow, I would go ahead and get out. However, if it moved sidewards, William, and didn't close below but didn't go anywhere after 2 or 3 days without it moving, I'm just going to get out. Not because it hit my stop, because these kind of entries, these kind of signals should move almost right away. And in my experience, if they don't move within a day or two, something's wrong with them, and I'll just get out. I'll get out with a stop, not a price stop, right? Not closing below halfway of this bar, but a time stop. If I get 2 or 3 days that's not moving sidewards, I would just take the position off, even if it were break even, because it should move. And if these signals should move quite quickly, and if they don't, I feel like there's something wrong with them. I hope that helps, William. Or close the position if there hasn't been any significant. Yes, exactly. Just what I said. Within a few days, 2 to 3 days, even if I don't hit my stop, if it's not moving, I'm just going to go ahead and get out. I can't remember. There's a good example of one. Now I can't remember. It was back about a month ago, but after 2 or 3 days, it didn't move. I just got out, and good thing we got out because it went immediately down. Bing says, Greg, STNG has rejected one ATR twice. Do you follow the plan for first profit target at second ATR? Oh, do I still follow the plan for the first profit target at the second ATR? Well, in your situation, because of the commissions, that we've talked about, I look, there's no right answer here on this, I think the takeaway on this is that you make the plan and you follow it. Not every single time you're going to be right. Not every single time you're going to be wrong. But if you can always leave yourself open to should I not, should I not, it becomes tiring, mentally tiring to do this day after day after day if you're just trying to make decisions every single day. I feel like it's easier, especially when you're starting out like this. I really feel like it's easier just to go ahead and stick with your plan. And your plan here would be your first profit target at the at the second ATR channel because of the commissions, right? I mean, for me, if I took this trade, would I be considering getting out of that? I mean, I could consider it. It still made a higher high today, which is positive. You know, if I would take this trade, I would probably use a close below the previous day's low at this point because it's extended. But because of your commissions, I would probably stick with the plan. And I mean, if you feel strongly about it, yes, go ahead and get out. But I guess what I'm saying is when you have a plan, if you override your plan all the time, then you don't really have a plan anymore. But I understand what you're saying. I mean, yes, it did reject the 1 ATR twice. And if you have a profit that you don't want to give that back, override it and take it. But, you know, this is the difficult part of trading. But in the big picture, I feel like it's better you have a plan, you stick with the plan. Because sometimes it's going to work better for you. Sometimes it's going to work against you. But I think it will even out. But at least you won't always have to make all those decisions every day. William says, I took DDM. Okay, good. Bing He says, yes, totally agree. I prefer a less stressful way to manage my trades. Yeah, that's what it comes down to. Because no matter what you do, sometimes you're going to be right, sometimes you're going to be wrong. But then you never, if you have full discretion at any single moment, then you always have to make that decision. And it's more of a holistic way to trade if you just stick with your plan. Yeah, I like that DDM trade too, William. But I also have DDM already on one of my mechanical systems over here. So just to try to keep it simple and for me to explaining it, if I took it here, I'd be all right. Some of these shares are from this mechanical trade. Some of these are from the discretionary trade. And I was like, all right, I know how to fix that. I'll just buy DIA because it's totally separate. Murat, can you show your positions? Yeah, sure. So DDM we bought here back here on the 26th of August with the close over the 200 back here at 45.75. It's mechanical, been phasing out this entire way. Up here we did hit one profit target here. So now it is at 49.59. So this has been a really good trade from 49.75. So that is position one. Position two, the overnight SPY trade, which I took today at 296.77. SSO is another mechanical trade that we took with the 1050 EMA back here at 180s or 128.66. And right now we're at 128.45, but we did hit one profit target higher today. So that's a mechanical trade. I did enter UNH today, Murat. Half position. Under the third ATR channel, back over. Under the 30, back over. And the V1. Did take this at 217.33. Half position because we're under the 200. And then the diamonds. I did buy diamonds with the move up back into value zone, sidewards movement, washout Friday, and then close above Thursday's close, and bought that here at 269.64. So those are the positions. Mert says, I was on off the past 3 days. That's good. That's good. Good to take some time off. Bing He says, for experienced trader like me, I get fearful to give back the profits, especially when profits is rare for me. Yeah, I totally get it. I mean, again, that comes back to trader psychology. I mean, you know, as people, as humans, we're kind of hardwired to want to let losses run because we're hopeful. We're hopeful that they're going to come back. And when we get profits, we get fearful because we don't want to give them back. And, you know, if you look at the evolutionary biological view of the world, you know, what scientists have hypothesized is back when we were farmers, you know, when we were growing things, we were always worried about the frost coming in. So when our crops grew a little, we wanted to hurry and go take them, because if we didn't take them then, we might get a frost and lose everything and we'd starve to death, right? So I believe that's what they theorize, why we don't like to, we want to hurry and lock gains in. But, you generally have to do the opposite in trading. When you have a loss, you should be fearful. You should be fearful that it's going to grow. When you have a gain, you should be hopeful. You should be hopeful that it's going to grow. But we tend to want to do the opposite, where we get hopeful when we get losses and we get fearful when we get gains. But you have to flip it around, guys. You have to be fearful when you have losses, and you have to be hopeful when you have gains. Bill Richardson. Hi, Bill. How you doing? Bill says, I know you wrote some puts on Disney last week. How much of your strategy involves options, and do you implement any option strategies, iron condor spreads, etc.? Thanks for the video. It's very helpful. Oh, thanks, Bill. On average, Bill, I mean, I take, a maximum of about 6 positions. Every position size maximum is 10%. And no more than 6 positions, or no more of a total of 60% of my capital. And I like to spread them around between different types of approaches, like, the mechanical systems, the discretionary systems, the overnight SPY positions, the put positions. But in general, I usually have 1 or 2 10% equivalent position sizes on puts. Most of the time 1. Actually, I rarely have 2, but if you have 6 positions, I probably allow myself 1 to 2, but they're the same position size that I would take on any one trade. It's not like I'm selling huge amounts of contracts because I have protection. It's still the same, 10%, but I generally only do cash secured or naked puts. I don't do spreads. I feel like with what I do from a technical level, I identify some pretty good areas that if I do get assigned the stock, but I've actually never been assigned a stock since I've been trading puts. But doesn't mean you can't get there. And I've had certainly losses on puts, but if I have a put that closes under my strike price, regardless of when the expiration is, I'm just going to go ahead and get out. But no, I don't do spreads or iron condors or butterflies or, credit spreads or debit spreads. I just focus on one particular type of option, and that's selling cash secured put options at a good, reasonable technical level that I've come up with. But with, like I said, if I have 6 positions, 1 or 2 positions kind of per trading strategy. But lately I've had more crossovers, right? I've had more crossovers now than I have had in years, where I've had lots of crossover ETFs and very few stock symbols. But if we look at it right now, what do we have? We have DDM, that's a crossover. We have SPY, that's an overnight trade. We have SSO, that's another crossover. We have UNH, that's a dip buy. We have diamonds, that's a return to value. And then we have Disney. So I have 1, 2, 3, 4, 5, 6. So I do have 6 positions. But does that mean it's my maximum? No, it doesn't, because I don't have 60% at work, because DDM, I'm out of 90% of my shares. And SSO, I'm out of about 45% of my shares, 55% of my shares. UNH was only a half position. So, I have room to be at my maximum. I have room for probably 1.5 positions at this point before I get to my max. Okay. Wow. Aftermarket, everything's gone up a lot. What's happening? That's good. SPY's up 73 cents overnight. That's fantastic. What about UNH? Up a little bit. What about diamonds? Ooh, sweet. It's up 50 cents. So yeah, that's good. That's really good. Okay, hope that helped, Bill. And thank you for coming by. I appreciate it. So, all right. I'm going to start saying goodbye to everybody. If you have any other questions, let me know. But Bill Richardson, thank you for coming by. Thank you for your questions. I hope I answered them and hope you keep coming back. Bing He, thank you for your questions. I'm glad we hopefully got that worked out and kind of gives you a roadmap on where to, how to go forward, especially vis-a-vis the commissions there. Murat, good seeing you, my friend. Murat's our friend from Norway, and thank you so much for coming back. And William, really good seeing you. Hope everything's going well in Hawaii, and you and I will be checking out our DDM trade tomorrow. And Kurt, really looking forward to tonight, getting to know you a little bit better, and getting to, I'm always interested in hearing people's story as far as why they got into trading, how they got into trading, how they're doing, what their challenges are. So I'm really looking forward to that. So John, hope that helped on ZNGA. Great to see you. Thank you for coming by. Marco, thanks, man. I'm excited to do the Alpha Mind podcast too, but I'm nervous. I have to be honest. And JT, good seeing you, sir. Hope you keep coming back. Anthony, keep in touch with me. Let me know how things are going. I'd like to follow your trades too. So if you get some trades, send them to me. I'd like to follow them for you. But good seeing you. Hope you have had a good weekend. Stephen Burns, my friend, really appreciate you coming by today. I hope you're doing well. And thanks for everything that you do for me. And thanks for everything that you do for everybody with your great courses, your great books, your mentorship. You've made some great advances, and you've done some real positive things for people. I appreciate that. Hey, Larry. Hey, what's Larry doing? Thanks, Larry, for coming by. Appreciate that. And I think, and Jesse. So Jesse, we're on for Tuesday. I'm really excited for that. So stay safe out there, and I look forward to our call, our very first call. And I think that is it. So, all right. Well, listen, on the way out here, go out, do something nice for somebody today. We need more of that in this world. Give a wave, hold the door open, say hi. Just generally try to be a good person. It's going to help. It's going to help improve somebody else's day, and it will also improve yours. So it's a win-win. So, hopefully I'll see everybody back tomorrow at the end of the day. And if you have any questions that I didn't answer today or you didn't think of, please feel free to send me an email, and I'm happy to respond. Okay. So, all right, everybody. Thanks again. Have a great rest of your day, and hopefully see you tomorrow. Bye-bye now. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit, No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.